we are going to be talking about something so deeply important today. So, I want you to lock in on exactly how to stop trading and blowing your accounts at the same time. So, when you are trading and you're blowing accounts, those things don't actually have to exist together. So, that's what we're going to talk about in today's masterclass. Now, the purpose of today's masterclass is to one, show you how to stop blowing your trading accounts, not by giving you some airy fairy strategy on use this indicator, don't use that indicator. It's really going to give you the deep, real reason why you're doing it and give you a exact 5-step roadmap to stop doing it. This masterclass is going to serve as something that you can rewatch whenever you need to recalibrate yourself as far as who you're being during your trades. Now, the first thing I want to say is that this is going to be lengthy, maybe an hour. Why? Because I have a lot of gems I want to share with you. And if you're blowing accounts, that is a very expensive problem to have because while you're trading, you're losing money and you might also be giving back money that you've earned as profit. So not only is it going to cost you money in the long term, but it's probably costing you money right now, regardless. So this class is really important to solve that problem, very expensive problem, very, very expensive problem that I solve on this channel, because this is the channel that talks about this for every video. Now, if you haven't been watching my videos, my name is Kai Wynn. I teach experienced traders who know how to trade but still blow accounts for some reason. Now, you may have already watched my free live training. It's a private training that's in the link of my channel. You may have watched that. But I also have released a free guide that shows you exactly how to become a trader who doesn't blow their accounts. Now, you can download it for free. It is linked down below in the description box right now as I speak. You can download that and you're going to be able to follow through exactly what it says, do it, and see some results, which is amazing, right? So I want you to go ahead and download that if you've ever struggled with blown accounts or you're still struggling with it now. The second thing I want to discuss or say before I get into these 5 points that are going to really hammer home exactly how to do this. And the reason why I'm prefacing this conversation with this is because if I just jump into the 5 things, then you don't actually understand why I'm telling you these 5 things. And you don't actually understand what to do with the 5 things. You might just skip through the video and find the 5 parts of what I talk about, and then you might just whatever. This video is going to be for the people who are actually tired of the very expensive problem of blowing accounts. And I'm so excited to be on live because you can ask me questions directly. You do not have to wait for me to respond to your comment on YouTube. You do not have to wait for me to get back to you in my DM. If you haven't followed me on Facebook and Instagram already, the link for those social media accounts are in my channel, on my channel homepage. So you can follow me there and you're free to DM me, right? However, if you don't want to wait for me to get back to these things like that, I appreciate the likes for everyone who's in here right now. Most definitely make sure that you stay tuned for this class. Now, the first thing I want to say is this is not a one-time deal. You are becoming a person who's no longer losing money in the market, and you can make more money than you ever have before. So if you think that's going to happen by watching one video one time, it's not. You have to train yourself to be a different person. And that is exactly what we're going to talk about here. This is not a one-time fits all, fixes everything. This is a journey you're now going to be on going forward. So if you want to take it seriously, then you have to put on your serious hat and say, I'm going to do this thing for the long term. Now, when you download the guide that is for free in the description, that's also not a one-time guide. You download it and you do what I say to stop blowing accounts, and then you do it over and over and over and over, and you become best friends with that guide. And as I update it, you'll be able to download the next free version that is updated. Right now, it has every single thing you need. And as time passes and I get more feedback and I get more results and I get to show more people's testimonials, I will be able to update it and make it even better for the next level of traders. Again, this channel is for experienced traders who already know how to trade. Now, before I get into the 5 things on how to stop blowing your accounts, you might ask, well, if this training is for experienced traders, how do I know I'm an experienced trader? Let me tell you. Do you know how to tell if a market is going up or down? Okay. Can you tell if it's consolidating or going sideways? Do you know how to read the most basic economic news on Forex Factory? Do you know how to tell a red folder apart from a yellow folder? Okay, great. You just go to forexfactory.com and you look at the economic news and you say, oh, this huge event is happening this day. I probably will get caught in a lot of volatility. I'm not trading that day. Can you do that? Okay, great. The next thing, do you know market structure? Do you know chart patterns? Can you tell a double bottom apart from a head and shoulders? Okay. Last thing, candlesticks. Can you tell the difference between a bearish and a bullish candlestick? If you cannot, I have a video on my channel and it teaches you exactly how to do that. It's like a 13-minute video. It's literally the video I made when I made it like a while ago, like years ago. But it's up on this channel now. And it's such a good explanation. I highly suggest you watch it. And if you can tell between bearish and bullish candlesticks, you're pretty much good. Are you an experienced trader? Have you been trading for at least 6 months? Great. The way that I look at experience is trading for at least 6 months to learn what I just explained. And then once you learn those things, you kind of just work your trading through those things for the next 6 months. Have you done that? Have you been trading for at least 6 to 8 to 12 months? And can you tell the difference between all the things I just said? Experience does not mean 10 years plus. Experience does not mean 1 year plus, 1 year plus, right? It doesn't mean you've made 10,000. It doesn't mean you've made 20,000. There's no price number on experience. Experience simply is candlestick patterns, candlestick strength, market structure, basic economic news, continuations, reversals, bearish, bullish candlesticks. Can you tell between those? Perfect. You're an experienced trader. This training in my channel is for you. Now, I talk to experienced traders if they're still blowing accounts, because you can be experienced and not be blowing accounts anymore. So what happens is you know how to read the charts. However, you still keep giving all your profits back. So you've crossed into this really weird land of knowing how to make money, knowing how to make a profitable trade, knowing how to read charts, knowing how to secure money out the market, take money out the market, and you still keep giving it back. That's who this training is for. So if you're making money and you don't give a lot of it back, you're probably a little bit past what I'm talking about in this video. But if you don't actually know if you're experienced or not, or what you're struggling with, watch a few of my videos or grab the guide in the description. And when you grab that guide in the description, you'll say, oh, I don't struggle with this at all. And then that's it. Then you'll know. But if you're like, oh my gosh, I've never even thought about any of this. Oh my gosh, I have to start doing XYZ starting Monday. Then you're going to know as well. Okay, I am not as experienced as I thought. I need to go and get more experienced. So that gives you a green light either way. It gives you the green light either way. You either are going to download that guide and you're going to say, I don't struggle with this stuff anymore. I don't need to be watching her videos. This is like way lower than I think I need to be doing right now, whatever, cool. Or you're going to watch it and you're going to say, or you're going to grab it, and you're going to say, oh my gosh, I need to be doing this stuff like yesterday. Oh my gosh, this is what I needed. And you're going to start implementing it and you're going to start to see your profits stay in your account. Either way, you have a path of what to do next. So let's get into this video. We're 10 minutes in of the first thing. If you've ever blown an account, I absolutely 1000% promise you it was not random. I am telling you right now that beginners, aka non-experienced traders, cannot blow accounts. If you are an experienced trader, you're now in the realm of people who can blow accounts. Unexperienced traders cannot blow accounts because they don't know what that is. You don't know how to blow an account because you don't know the difference between holding a trade. You don't know the difference between uptrends, downtrends, consolidation. You don't know the difference between anything. You're not experienced. So you can't. So if you're blowing accounts, that literally tells me you're an experienced trader because unexperienced traders cannot blow accounts. So if you're blowing accounts, if you've ever blown an account, it was not random. It was a pattern that I see all the time in my students. I saw it in myself. Then I found the framework through doing it myself, created the guide. Now I teach it to my students and my one-on-one high-level traders. It's a pattern that we all go through when we learn how to trade. And we're going through it because we know how to trade. Only people who know how to trade, only day traders who know how to trade can go through blowing accounts. So it's not just the market. I want us to stop blaming the market, and I want us to stop feeling like, oh, this trade just flipped on me. Someone's asking what's up with Bitcoin. I'm not discussing Bitcoin right now. I am discussing this masterclass, but I appreciate you being here so much. So just want to let you know that blowing accounts is a predictable pattern that only happens with traders who are experienced. If you're just jumping in now and you want to know, well, how do I know if I'm experienced or not? I just explained it very deeply in the past 5 minutes. So just scroll back a little bit once this video is live. Once this video is posted to my channel, you can go back and scroll back a little bit, or you can do it now, either or. But there's a predictable pattern that causes almost every single type of blow up. And I'm trying to tell you right now, trying to build up the conversation so that you understand that once you see how you're blowing accounts, you can't unsee it. And there's only so many. There's someone who said that. There's someone who said this. I don't remember who it was, but someone said that there's only so many wrong mistakes you can make. And I fully believe that. In trading, that's one of the reasons why it's so great to keep going in trading. So awesome to keep going in trading. Because once you've made beginner mistakes, you kind of age out of them. And you're like, oh, I don't really do those things anymore. Right? And then you get experienced. And then you're like, well, I'm making these mistakes, but I don't make those anymore. And then you get a new set of mistakes and you don't make those anymore. And then you make some more mistakes and you don't make them anymore. And I feel like the last part of mistakes that you make as an experienced trader before you become profitable is blowing accounts. That's because you are a person who knows how to trade, you know how to read, you know how to analyze charts, you know all of that. But you don't exactly know the 5 things I'm going to discuss in this video. And that's why this is so important. So it's really not about finding better trades. It's really not about a different strategy. It's not really about knowing more and having more knowledge. That is the absolute farthest point of where you need to be headed to. Okay? You do not need to go and learn more knowledge and learn more things and learn more strategy and learn a different market. You don't need to keep switching between options and futures and forex and switching between all of these different instruments. All you need to do is fix the internal mechanics behind trading. Because what's happening is your drawdowns should not become account killers. When you take a loss, how are you turning one loss into a blown account? That's like turning one argument in a relationship into ending the relationship. Then if you think about it in that aspect with that analogy, would you ever actually have a relationship ever? Probably not. Because who is not going to have an argument on this earth. Everyone's going to have arguments, but are you going to turn every single argument into a breakup? What about when you're married? Are you going to turn every single argument into a divorce? Okay. Well, you're never going to get anywhere. So in trading, you do not have to turn one loss into a blown account. There's levels in between, and that's exactly what we're going to look at today. Because if you understand that you don't have to blow your account at all, like ever, because there's 5 things involved in this that I'm about to go into so deeply in this masterclass, then you're probably going to reduce your losses, not because of any magic I'm telling you, but because once you see the mechanics behind what I'm saying, you're not going to be able to blow them, because it's just not going to make sense to you to do certain actions anymore. So your normal drawdowns are always going to be there, but like whether you're 1 year in, 2 years in, 10 years in, 20 years in, I watch traders who have been trading for 20 plus years and they still have drawdowns. What makes me any different? I see traders who have been trading for 40 years still have drawdowns. Does that make me any different? No. You have to accept, number one, this is one of the things you learn as an unexperienced trader. As a beginner trader, this is one of the things you learn, is that you are going to have losses forever. There's no such thing as having no losses. And that is why I used to brag about a win rate of 87%, 83%, sorry. But then I got to a point where I said, who cares about that? Who cares that you win 83% out of all trades? Who cares? Nobody cares. Like, as an active trader, 83%, great, cool. But who actually cares? Because that's something that you look at as a beginner, and then once you get more experience, it becomes kind of obsolete. Like, of course you're going to win more than you lose. That's how you become profitable. So it becomes something that doesn't really matter anymore. But what I'm here to say before I get into this first point, you cannot, and you will not going forward, be able to let one loss turn into blown accounts anymore. They shouldn't kill your account. So the first thing we're going to talk about is the word neutrality. And what I'm saying here is that neutrality is non-negotiable. If anything I'm saying during this video sounds kind of like you don't kind of understand it, I would highly suggest you just still watch through the video, because it's going to be some new information in here. However, I'm going to explain this point to where you don't need to go outside of this video to understand it. Of course, it's great to watch my other videos because it's one topic about experienced traders who are blowing accounts talked in 1,000 different ways, which helps you to understand the idea, helps to reinforce what I'm saying. But you don't actually have to go outside of this particular masterclass. So I want you to really sit in and be present in this class if you're here. And if you're for the people who are going to watch, the thousands of people who are going to watch afterwards. So neutrality is the difference between having one idea and having 2 ideas. Now, if you think about the idea of polarity, only one thing can exist at one time, but the counter opposite is always in existence. So you might be cold right now, like in temperature, but the feeling of being hot is also an experience that you could have, right? You could put on a jacket, all of a sudden you're hot. Or if you're hot, you take off your shirt, now you're all of a sudden you're back cold. You can constantly adjust between them. Neutrality is the opposite of that. Neutrality is when you're in the middle and you're no longer hot or cold. You're neutral. You don't have any particular degree on either side. If you think about a extended ruler, there's a negative side, there's negative numbers, and there's positive numbers, and there's a 1, there's an origin point. Neutrality is that origin point. If you think about a number line, right? -1, -2, -3, -4, and beyond. On this side is 1, 2, 3, 4, and beyond. There has to be a neutrality point for positive and negative to exist. All right? So what you're trying to do is become that neutral center origin point. Your positive trades and your negative trades are going to exist, but you as a trader need to be neutral. Being neutral is not negotiable. So if you're not neutral, what you're doing is you're trading from a disadvantage because you're trading from polarities. And even if the setup is perfect, I learned this the hard way in real life, even when the setup is perfect, you are going to have a very, very difficult time capitalizing on anything if you're not neutral. If you're operating from a positive state, you're going to have a hard time capitalizing because you're going to be in your head about how great you are, how amazing you are. It's going to be ego in your mind, clouding your mind, clouding your eyes, clouding your judgment. If you're trading from the negative side, you're probably going to be too scared to trade. You're going to stay out of trades. You're going to not be able to take any trades at all, or even stop trading, or convince yourself you don't want to trade at all. We've done both. I've done both. I know you've done both as an experienced trader. So let me give you an example. There's a time where you lose money on a Friday. You say, oh my gosh, I just lost so much money. Oh my gosh. Maybe you didn't blow the account, but you just lost a good chunk of money. You're like, oh my goodness. And you say, I'm not going to trade for the rest of the week. I need a break. I just can't. I can't do it. I just need a break. This is too much. So you've taken something that happened on a Friday and you've exacerbated it to making you a terrible trader. And now you don't want to trade at all. You've told yourself, I don't care when the market opens next. I'm not trading. I'm not putting nothing on the line. I don't want to do anything. Well, is that actually helpful when you can only get better by more experience, by putting yourself back in the game, by trying again? Can't make any money if you don't place any trades, right? So you can take a break, sure. But when you're taking a break out of fear of losing money, you're trading from a negative aspect. Now, let's say a positive aspect. You make so much money Monday through Friday, you make so much money. Oh my gosh, you're rolling in the dough. You've wanted to make so much money. Now you have made your first $10,000 month. All right. When I made my first $10,000 month, I was like, oh, okay. Like, this is a thing. This is real. I was more so shocked that it was actually real than I was at the fact that I did it. Because I was like, okay, trading is like up or down. It's like 50%, like call or puts. Like, it's really not that complicated. But I was more surprised and shocked that you can actually make money from your phone. That's all you need. It's crazy, right? You turn a skill and you make money. Crazy, right? But let's just say you make your first $10,000 month and you're like, oh my gosh, I make so much money. I'm so great. Blah, blah, blah. I got all this ego. And then you start trading from that. You're probably going to blow your account, not because you're a bad trader, not because you don't know what you're doing, but because you're trading from a non-neutral state. You're trading from a ego and arrogant place, which is going to, again, cloud your judgment. What I'm here saying is that when you're not neutral, there's something clouding your judgment. Period. It doesn't matter if it's positive or negative. So one thing I really had to get out the habit of is making myself reinforce habits that were not neutral. Let me explain some. Number one, if you're like from the negative, right? Forcing myself to not take trades because I was scared to lose money again. That is reinforcing, even though it sounds good on the outside, is reinforcing that you are not neutral. You're reinforcing the fact that you think that losing money means that you should stay out because it means you're a bad trader. How does that affect you and your trading? All it does is it reinforces that you feel like you don't know what you're doing. Then you're going to act like you don't know what you're doing, right? Let's say from the positive aspect, you make so much money and now you're like, oh my gosh, I made so much money. I got to make a bigger trade next time. I deserve to make bigger trades. Then you're literally going to be trading like a poker player. And you're probably going to lose all your money. So when you're neutral, when you're centered, when you're in origin, when you don't care about the ups and the downs and the volatility and the what happens is that your judgment is no longer clouded. It almost disappears because you're not doing things to reinforce your mind being clouded. I have a video that's going to come out in March called 10 red flags of, or 10 signs you're going to blow your account. 10 red flags or 10 signs you're about to blow your account. The purpose of the video is so that you watch the video, you find 3 to 4 things out of the 10, and you say, I identify with these 3 or 4 things. I'm going to work on not doing them. Essentially, what they are is what this point is saying. It's going to help you identify all the negative you're reinforcing in your trading. So that video, it's scheduled to come out a little bit from now, but what's going to happen when you watch it is you're going to say, oh my gosh, I've been doing this thing, and this has been reinforcing me to not be neutral. And my judgment keeps being clouded. It's not that I'm a bad trader. I know what I'm doing. I'm experienced. I know how to recharge. I've made money before. It's because my judgment is not clear. And so I have to try to clear the way for me to even see anything proper. By the time you see it, you've missed the trade. Now you're chasing. Now you're revenge trading. It happens in a sequence. It's not, I'm a bad trader, I blow my account. It's a sequence of things happening. So you want to make sure that you're neutral. Okay, another thing that's probably taking you off your neutral is your sizing in your trading. If you do not trade individual cash, as in your own money, and you trade leverage, let's just say you paid $100 to get access to $50,000 in margin and in leverage in futures trading. Just because you were able to pay your $100 does not mean that your nervous system is automatically going to know how to deal with numbers that are that big. $50,000 when you've only ever seen 5,000 in your life at one time. So what happens is that you can be over leveraged, and because your nervous system doesn't know how to handle it, you're going to self-sabotage yourself to continue losing. This is something a lot of people don't think about, but just because you have the ability to get access to that amount of money does not automatically mean that you'll be able to trade with it. So you can also cloud your own judgment by entering into the trade incorrectly. So when you're entering in and you feel like a trade is too big, that's going to cloud your judgment. That's going to cloud how you trade. So the first point is that neutrality is non-negotiable. And I'm coming out with a video that gives you the 5 steps on how to, like, literally how to become neutral, how to become a neutral trader. And that video is coming out in March as well. So next month, that video will be out. So make sure to subscribe to the channel so that you don't miss that video when it comes out. You're going to know when it's out. And it's going to show you the 5 different things you need to do to be a neutral trader. And one of those things is going to discuss how you size your trades. It's going to clear everything you think that is not clouding your judgment that actually is from someone who is an active trader. Okay, because neutrality simply is your ability to follow rules without effort. This is where you can see a trade, know how to get in, know how to get out, and be great. For me personally, I'm a scalper. That is my realm. That is where I prosper. Scalp day trading. That is what I do best. I know how to swing. I know how to scalp. I know how to wheel. I know how to leap. I know how to do all the things. I mean, all those are also swinging, but I know how to do futures. I know how to blah, blah, blah. But options, scalping is where my expertise comes from and where it lies. And one thing I noticed is the reason why I found that out is because I can be the most neutral while doing it. So it doesn't really matter what you like. It doesn't matter what money you want to have or what leverage you want to have. It's about what instrument makes me the most neutral and how much money can I trade with to be the most neutral. If you cannot find yourself to be neutral trading futures, then don't. If you can't find yourself being neutral trading options, then don't. If you can't find yourself being neutral trading crypto, then don't. Because if you cannot trade from a neutral standpoint, and you never have the ability to trade without that effort, and you can never have a clear judgment, you're going to blow your account every single time. So you might want to estimate or evaluate, sorry, you might want to evaluate, hey, do I keep blowing my account because I really can never feel neutral doing this thing that I do? That might be why you're blowing your account. So the second thing I want to go in today is the 3 actions that actually blow your account. Now, the first thing is that accounts are not blown by one bad trade. They're blown by predictable behaviors that stack up on top of each other. So the 3 actions that actually blow your account I talk about in my free private training. The link for it is it's literally my best free training. You can find the link for it in my channel homepage. You can watch that after this video. It's like a 15-minute video. It'll walk through those 3 things to actually do. So you want to make sure to watch that video, because accounts are not blown through one bad trade. Like I said in the beginning, you have one bad trade and you're turning it into a whole entire blown account. Doesn't need to be that way. The first thing we just talked about is that you're trading with an unclear mind, and you're letting that dictate how you trade, and you don't need to. So one of the things I want to say is that one bad decision is turning into a sequence of bad decisions. In one of my recent videos that I filmed, I talked about a car accident, and just a hypothetical car accident, because when you have a car accident, you can really be upset at the car that's totaled. You're like, oh my gosh, how did I just total my car? But if you think about the sequence of events that happened before, you might say, actually, when this happened 2 days ago, my car was already totaled. So think about it, right? Let's talk about a drunk driver, for instance. They decided to go out when they probably said they weren't going to. They decided to drink. They decided to get in the car. They decided to drive. They made a lot of bad decisions, and then their car got totaled, and they ended up in jail somewhere. Would that car have got totaled if they didn't do those series of things that previous day or previous night? No. Car could never get totaled if you didn't drive drunk. Now, there's always a sense that you could, okay, yeah, if you drive drunk, you are probably going to total your car. But if you drive regular, you might also total it. People total their cars sober every single day. But the likelihood is a lot higher when you are drunk. So what you did is you traded from, in this case, a non-neutral state, and then you decided to blame the blown account, which is the totaled car. But the blown account is just a symptom of something that happened prior. So what I want you to do is to look at all the previous actions that you've been doing, that you've been trading from, which is what the private trading goes through. So if you haven't watched that, people have been watching it all week. Now you enter your email, you get access, you can watch it, and then your access is going to expire. So when you actually log in, I can see who watches it, and you need to watch it in full, because that is going to expire, once you sign up to watch it. And some of the things I wrote down is that, in addition to the things I'm going to talk about in that private training when you watch it, is that you overtrade after your wins. So you win and you don't take intentional time off. That's one of the best things I ever did. I'm not going to lie. Taking intentional time off is one of the best things I ever did, because when I'm making a lot of money, guess what? My judgment is clouded. I don't even see nothing but dollar signs no more. I need to be in every single trade in every single market, because I feel like I just got it under lock and I know how to make all this money, and making all the money is what makes you give it back. Because you're trading from a non-neutral state. You're not in the origin point anymore. So what I started to do is, after I make a huge win or a huge winning day, or I've reached a certain goal of profit, take 2 to 3 days off. Intentionally go distract myself doing something else until I'm back at my neutral state. And that is what allows me to make so much more money than I ever have made. Because I decided I'm not going to keep trading when I've made my money already. Wasn't the point to make the money and go spend it? What am I doing still in what am I doing in the markets? What am I doing here? I'm here trying to prove to myself that I can still make money, and then you give it back. That's how it works. So even if we look at this from how I used to be, like before and after. Before, I would stop trading because I was losing so much and I was scared to make money and I was scared to place trades and I was scared to lose more. Now, I stopped trading for a different reason. I stopped trading because I've made so much money and I don't want to give it back. And I want to go spend it and I want to go chill and I want to go vibe. There's a difference. I still stopped myself from trading by deleting the app off my phone or going and finding some activity to go do or go hang out with my friends or go out or whatever. But I do it for different reasons now. So that's one of the biggest things you can do. The next thing is trading to get back to green. In trading, nothing is recoverable because you only need to recover something that's broken. You only need to recover something that you lost. And trading, like once the day passes, you can't get back the money that you lost. You can't like undo the thing that you did. You like, let's say you made a whole bunch of money during the month, and then the very last day of the month, you knew you weren't supposed to be trading, but you trade anyways. I've done this before. What? How else can I say it if I haven't done it before? Make all this money, make thousands of dollars. Very last day of the month, clouded judgment. If my judgment is clouded, that means no trading. If I can't uncloud it in time for the market to open, or it's just super clouded, no trading, period. Because you're like, it's so much cheaper to just not trade. So make all this money, and then you know that your judgment is clouded because in your head you're like, oh my God, I just made all this money. I'm about to end the month so proud, blah, blah, blah. Last day of the month, blow it all. I've heard that on the internet as well, like from random people who I don't teach or talk to or who are not my friends, just regular people blowing accounts on the very last day of the month. And I've done it. Why? Because we're not trading from a neutral, unclouded headspace. So the only way to trade from a unclouded headspace is to identify what is clouding your mind and either taking that time away to get it unclouded or just not trading at all, period. Okay, it's very simple. Now, the next thing is forcing trades when you're flat. That is a predictable behavior that's going to blow your account when there is nothing to trade and you still keep trading. Now, I came up with this analogy two or 3 days ago. When you need something from Walmart, does it matter if you need it if the store is closed? If I run out of toothpaste at 2 a.m. in the morning and Walmart is not open at 2 a.m. where I am, even if I get in my car and I put the key in and I drive over to Walmart and I have money to pay for the toothpaste and I walk up to the door, it doesn't matter what I do. They're not opening the door to sell me toothpaste at 2 a.m. So I just wasted my time trying to get something I know I can't get. And that's what happens when you're trying to trade in a consolidated market or a flat market. You're walking up to the doors of the stock market and you're saying, hey, knock, 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 sell me toothpaste. Knock, 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 give me some profit. And they're like, everybody's indecisive today. There's some big news coming up. And nobody wants to touch anything right now. Market is going sideways. Everybody's taking a break. There is nothing for you. We're trading in a $2 zone the whole day. We ain't got nothing for you. And you're like, no, I need mine. So what do? You get a rock, you break the glass, you go into the Walmart. Like, you're doing too much. How about you just go back home and understand that you're not getting no toothpaste at 2 a.m. So when you're trying to force trades, trying to force your way into Walmart at 2 a.m. when there's nothing for you, that is why you're going to blow more accounts. Because now you're going to go to jail because you broke the glass of a corporation's store. Now you're going to go to jail for vandalizing. Did you have to do all that? You didn't have to. In this case, you're going to lose all the money, all the profit you just made recently because you feel like you want to go force a trade. And now you just lost all your profit. Why are you doing that? There's nothing for you. Stay out. Go do something else with your life. All right? And the last thing I'm going to say here is before we get into the third point, one emotional trade opens the door for the next. Okay? So when you realize that you're trading with the clouded judgment, your cheapest next move is to stop trading. Because when you have an emotional trade and it blurs your brain, you're no longer neutral. You're now setting momentum. You're like, well, I've already traded once. I might as well try again. And this gets even worse when you know how to trade. I'm telling you from experience. Because when you know how to trade, you're like, well, I know how to read charts. I know how to read this stock. I know the patterns of this ticker like the back of my hand. I know the patterns of QQQ like the back of my hand. So I was like, I'm just going to get back in because I know how to trade. I'm going to get back in because I know how to do this. I've made money. I'm going back in. And because you know how to trade, it makes you want to get back in. And because you got back in, now you lost. Did you lose because you know how to trade? No. But you got back in because you know how to trade. And that's the danger of people who know how to trade and people who are experienced in day trading. Because you open up a whole new can of worms when you know how to trade. You know how to make money. That's your biggest danger. Because now you can't convince yourself to not go trade. If I, like in the beginning, if I didn't know what to look at on a chart, I was like, oh, well, I guess I can't trade. Ain't nothing there. But when you know how to trade, you can literally make something out of nothing. And let's just say it is moving properly. You can literally convince yourself, hey, I'm going to go in because I know how to make this money. It's never going to work in your favor. The last thing I want to say on this point before I get to the third one is that you can make money having bad habits and you can lose money having good habits. You always often think, I'm only going to lose if I do something bad. Not true. You can make money while doing something bad. So you want to make sure that you're not letting your emotional trades open the door for the next, because when it opens the door to the next, now you're not only probably going to lose money, but you're reinforcing bad habits because you made money. You might make money doing something you know you shouldn't do. And that's going to kill more money than you actually think. And that's one of the silent things that's going to blow your account, right? All the things I just talked about were predictable behaviors that if you do them, they're going to stack on top of each other and probably blow your account. Okay? The third thing I want to talk about is that not every trade can be married. Now, if you're a day trader, this is specifically for you, but it still works for you if you hold for swings. The reason why is because the moment you get emotionally attached to a trade, you actually stop managing your risk. You stop managing the trade and you start caring about your ego. So you have a trade, you entered in, it's now up 100%. Whatever you put in, you've doubled that money. That's what 100% means. You put in 1,000, now your trade's at $2,000, which means you made 1,000. When you make that money, you're now going to say, well, it went up to 100%. Can I get 115%? Can I get 120%? Can I get 130%? And this is not just for day traders. Again, this is for swingers too, because you might see your trade go up 30% and you're like, ooh, can I get 40? Can I get 50? Can I get 60? And sometimes it'll give you an extra 20%. You're like, ooh, right? But we have to realize that those are the unicorns. Those are the things that don't happen often, that we shouldn't seek for. Those are the things that are going to happen out of a blessing, but those are not the norm. And so when you try to normalize your trades running an extra 20, 30, 40, 50, 60%, and you making extra, well, the day where it doesn't, the day where it gets to your profit and you're trying to make it push more, is the day you're going to lose your whole account. Because those days where it actually does move is going to be 1 in 100 times. Like 100 times you trade, you might have one time that does that. 100 is like 3.5 months. So every 3.5 months, you're going to have something that just goes crazy, right? But for the most part, that's not going to happen. And that's fine, because guess what? If you don't marry every trade, you're going to make money more than the person that holds their runners. I've said it on this page. I am like a proponent of like Why are we holding our runners? Why are we letting our runners run? Why are we holding trades? And a lot of people say you should. Okay, cool. But in my eyes, when you make profit and then you let that runner run, you're risking all the profit you've already made on the altar of trying to push something that may or may not push. Why would you risk your profit on the altar of maybe getting more? You know, you just make more money if you took all of it every time. If you took 100% every time instead of letting 25% or 30% of your runner run. You know that, right? You would make more money. Listen to me. You would make more money if you took all your profit off the table every single time than if you left some on the table and then let those lose. So I got in the habit. One of my major rules, if you ever work with me one-on-one, this is one of the things I'm going to tell you. Learning to take all your profit off the table is a skill that most traders don't have. Take all your profit off the table. Why would I make $1,000 and then capture 700 and then let a contract out into the wilderness for no reason? I'm taking all my profit off the table and I'm going to capitalize off of the move, and I'm not going to try to force something. At the end of the day, one thing I repeat to myself that keeps me neutral is, one, I'm just a girl. I'm just a trader, and there's nothing special about me. Like, I don't try to have any ego or I'm smart or I'm intelligent. I know that I am, but that's not what drives my trading. What drives my trading is clarity in my mind. So if I don't have clarity, like having all those positive thoughts about you as a person, cloud your judgment. I don't care who says what. Like, it just does. So it pumps up your ego. And when you're trading from that, you're probably going to always lose at some point. Now, when it comes to making money and letting your runners run, if that works for you, it works for you. I don't have anything to say about that. You do what you do. Hey, what can I say? What really could I say to make you stop doing what works for you? But what works for me is taking money off the table, especially as a scalper. I've lost more money by I've literally lost more money by trying to make a runner run or leaving a runner running than just taking all my profit off the table. The months that I am the most profitable is the months where I take all of my money off the table, period. I just take all of my money, every single cent off the table. I'm not gonna make money and then let you let you hold some of it. Why would I let you hold some of my money that I already have seen? I've already realized it. It's already right there. If I sell this contract, then I get to keep it. Why would I let you keep it? Why would I let you play with it? So again, I say I'm just a girl. I'm just a trader. And that last thing is, don't forget where you are. This is the stock market. So you think you're on your high horse and you think, you know what? I'm going to let this 100% go to 115 because I'm that guy, because I'm that girl. I'm going to let this run up. I'm going to let this run. And you don't understand where you are. You're in the most volatile environment that exists in the world. And you think that you can predict at what percent, and you're going to tell the market what percent to go? All right, do it. I don't play that type of game. The people that don't trade anymore were the people that trade like that. Right? I was listening to some person who's a world-renowned author who used to day trade, and now he says that he would never trade. He would never trade. He would never trade when he's made hundreds of thousands off trading prior, but he blew all of his money. And one of the reasons I think so, after reading his books and listening to a lot of his talks and doing my own research and not having a biased opinion, I don't really know the guy, I just listened to his work. But one of the reasons I think is because when he was talking about blowing his account, I'm like, you forgot where you were at. This is not a win lose, lose, win, I win, you lose, you take money from me, blah, blah, blah. There are trillions of dollars in the market. My $10,000 doesn't bother your 100,000. Your 100,000 does not bother my 200,000. My 200,000 does not bother your 100. Like, our money does not bother each other. You just forgot where you were at. That's why you don't want to trade no more, because you thought you wanted to let all your runners become runners and you lost all your money. That's not the same thing. Yeah, someone said I full ported on Friday, and what I don't know what that last part means, but yeah, full porting, for anybody who doesn't know, is essentially over leveraging your account, buying more contracts than you can afford, using a lot of the money in your account. We are going to get into point 4 pretty soon. And it's using all the money you can because you are fully convicted on the direction you see. You see it pushing down and you say, this is my chance to get in. I'm getting in. I'm getting out. All right. But then full porting is dependent on you not missing your exit. And so this is something that a lot of my high-level traders had issues with in the beginning. If you ever work with me one-on-one, you're going to understand. I'll share more about this with you. But your exit is more important than your entry ever will be. Because I've had trades where I entered, price moved $5 in my direction, and then it just shrunk. I didn't take my profit when it went up to the sky. And so now I'm holding it, hoping that it goes back up because I put too much money in. Well, you're out of luck, buddy. You're out of luck. Me, out of luck. Because when you mess around, like he's saying, you mess around, you're going to find out. If anybody has a degree in finding out, it's me. I found out for sure. Right? Hopium is definitely top tier drug of choice for all traders. Drug of choice. What you want? You want some hopium? We got that for you. We got that. 4,000% sure. Man, the market will always find a way to humble you when it deems necessary, for sure. And that is why I talk about neutrality on my page. Neutrality is not a negotiable, because when you have your eyes clouded by who you think you are and how great you think you are, and you're this, okay. Well, when you're thinking about all that stuff in your head, and the market's like, I don't know what she's talking about. I don't care what she's talking about. I'm about to flip this trade around. Hopefully she catches her exit. I don't got no time to be up here. I'm gonna be down there. I got a liquidity zone to go catch. I'm gonna be over there. If you're in your mind talking about how great you are and you forget where you're at, you forgot what environment you're in, well, then you just like, the market don't got nothing to do with that. It's gonna close at 4:30 at 4 p.m. Eastern Standard Time, and then it's gonna reopen whenever it reopens. So it don't got nothing to do with that. So you cannot marry your trade. No trade deserves to be in forever unless you're in Bitcoin. Unless you're in Bitcoin and plan to never sell, right? Unless you're in S&P and plan to never sell. Unless you're in VOO. Unless you're in BTI, plan to never sell, right? But if you're in individual stocks or you're trading any instrument, Forex, crypto, options, futures, doesn't matter. No trade deserves to be in it forever. So you trying to push your 100% to 110, you might just leave with negative 100%. Now you're out of luck. Don't push your luck. Take what's lucky. That was the one thing I had to understand about trading, is that it sucks. Because in real life, you want to feel so right all the time. And so you always want to feel like you're always making the right decision. And that's not how this works. You need to be so grateful and lucky that your trade even went profitable, and take, if it's $2, take it. If it's $5, take it. I had to learn to take what it gives, because I've lost out on thousands, tens of thousands of dollars on one single trade because I wanted to push 10% more. Lost everything. No, like, I didn't make the channel for fun and giggles. I made the channel because there's way too many experienced traders blowing accounts every single day doing the same dumb stuff that I was doing that is not talked about. And I wanted to make a hub for people who know how to trade but keep blowing accounts, because it's just ridiculous. And now you can grab that free guide in my description and literally follow the steps and reduce your blown accounts and watch the videos, right? I was also $100 away from passing an account on Friday. I'm assuming you're talking about a futures account probably getting funded. So you bought a funded account and you were $100 away from passing it. So you're almost at your eval, passing your eval. Okay, cool. My intuition told me to wait to, that intuition be like, yo, hit the rocks, bro. Kick rocks. Get out of here. Don't do it. Don't do it. It'd be like, don't do it. And when your intuition is saying things like that, it's trying to get you to be neutral. It's like, hey, we have too much. We're $100 away. We've never been this close. We're about to bank in on this funded account. You've done so much work this far. Like, let's make it count. And then you're like, but I'm an experienced trader. I know what I'm doing. I'm gonna get in there. I am 1,000% feeling that experience. Took a trade anyway. That wasn't my go-to setup, right? That clouded judgment. I'm going to take whatever I feel like taking because I need to get this last $100, right? Because you know how to trade. Of course you can make $1,000 on a funded account because you know how to trade. And you've made, I'm assuming, I don't know how big your funded account was, but you've probably made thousands of dollars to only have 100 left. So your account, you've like in that same account, you've already made $100 100 times. So you're like, oh, bet I can make this, right? It's a Friday. It's Friday. Quad witching is next Friday. If you don't know what quad witching is, that is when all contracts expire on one given Friday for all companies. Well, equities, I should say. So for SPY and QQQ, there's expirations every single day. For every other company, it's every Friday. So quad witching is when all that happens on one particular day. So I thought quad witching was last Friday, but it's actually this upcoming Friday, super volatile day. Okay, so that's when contracts are normally going to be a lot more expensive on quad witching. Quad is 4. And so it's going to be a lot more volatile. So things like that, trading on a quad witching day and saying, oh, well, bet I'm going to take advantage of this volatility because it's a crazy, like, volatile day. I'm going to, right? And the last thing he said was, I took a setup anyways. It wasn't my go-to setup. Ended up averaging down. The account got liquidated. Oh, man, that liquidation. And the thing is, I'm totally not picking on you. I really appreciate you for putting your comments. I'm saying this for people, the thousands of people who are going to watch this in the future as this video is on this channel, is that which one was easier? Taking the 24 hours off? Well, really not even, because market closes at 4. Well, yeah, because it's Friday. Let's just say the market closes at 4. Taking that 24 hours to not trade on a Friday was quicker, or having to go and pay for another account and start the process all over again. And that's the hardest thing that I have had to face, with a mirror in my face. Like, oh my gosh, you are so far, you're so this, you're so that, and you keep starting over. Because which one's quicker? Like, throwing your phone out the window for that Friday, like literally getting rid of the phone and saying, you know what, I cannot, I'm just not doing it. I don't care what I have to do. I don't care who I have to text. I don't care who I have to go hang out with. I don't care what I need to do. I'm getting out this house and I'm not looking at no charts. I'm not doing it. Right. But that is the thing we have to do. One of the hardest things is like, dang, I really do have to try really hard to get off the charts, especially when we're experienced and we love it. So you're speaking to the choir right now. When we love it, we don't want to not trade. We're like, it's a day of opportunity. Why would I sit out? But like I said in the beginning, if you guys didn't catch in the beginning, definitely rewatch this live, is that you're gonna sit yourself out for different reasons as you become more experienced. So in the past, before you were experienced, you were sitting out because you were scared to lose more money. You were scared to make more trades. You were scared to lose more, and you were scared to place any trades at all. Now that you're experienced, you have to sit out, not for fear, but sit out because I've made so much money. I've come so far. I know what I'm doing. I know how to trade. I know I don't want to lose the profit I made thus far. I don't want to lose the progress I made this far. That's why I'm going to sit out. So sitting out is not necessarily bad. It's really about why are you sitting out? So when you become experienced, we don't sit out because we're fearful anymore. We don't, bro. We've lost too much, learned too much, know too much to sit out. But when we become experienced, that is when we have to sit out. Not because of fear, but for a totally different reason. For knowing too much is why we need to sit out. And he said, the part that hurts is knowing it wasn't even supposed to happen. Knowing we were supposed to sit out and we don't. You didn't sit out on Friday. There's been so many Fridays that I'm like, I'm not trading today. And then be in the bed in a trade. I'm like, how did we end up here? How did we get here? It's because you have to put so much intention behind not trading. Like the biggest thing I would say